Good morning, ladies and gentlemen. How are you guys doing today? I hope everyone is doing great. Today is Monday. We are approaching, we can say, the last 3 trading days until Christmas, 3 or 4 trading days. So markets in general, they tend to just slow down because less activity is happening due to Christmas holidays from major bankers, from hedge funds. So we will try to be a little bit more careful. There are some, as I said at the beginning of this month, some weird events. They tend to appear towards the end of the year, some reports that just sometimes the markets, they just react, and I'm just purely talking in terms of volatility and liquidity, not in terms of price action. All right. So let's get started. As you can see, the risk warning disclaimer. And to let you know one more time that on a weekly basis, I record and we upload the fundamental analysis for the week, major news events in a podcast format. So it's a great opportunity, in my opinion. You can understand what to expect from the news for the upcoming week. And of course, if you don't know yet, if you are new here, we have our native mobile application. You can download it and do your trading activities from there if you like. So let's have a look at the premium analytic portal, morning briefings, to see what's the market headlines for today. So the stock market is sliding because investors now fear recession more than inflation. Guys, at this point, it's good just to show you about the market cycle. I think it's important for you to know. So we have this, let's say, these cycles here. The first one we're going to see bottom are the bonds. Okay. So then the second one we see the bottoms are the stocks, the stock market. And the third one is the commodity markets. What does it mean? It means that first we see that banks, they increased interest rates, and automatically means that bonds, they get more appreciated. So bonds, they first turn to make their highs. So, and then stock market follows when the bonds, they go a bit lower, when they reduce interest rates. Then investors take money out of the bonds and they put them in the stock market. And then when they see that stock market as well is not performing that well because due to the fact that stocks are bottoming, then we have money flow into commodities. And that's why most of the times people have this association that when when we have inflation, the money moves from bonds to the commodities, but that's not exactly how it's done in the reality. It used to happen before, when the gold was banked by any amount any major bank would like to produce currency. They had to use gold as an asset to deposit gold. It was a really strong association before. Now it's not that much correlation based on the market cycles. If you want to know more about that, I can explain you in another session. So let's move on. Individual investors hang on in a wild year for stocks while pros sell. Qatar warns Brussels bribery allegations could hurt energy talks with Europe. Battle for Bakhmut, it's a critical test of Russia's prospects in Ukraine. Tunisian opposition calls for president to step down after low voter turnout. Defense constructor L3 Harris Technologies plans to buy Aerojet Rocketdyne for $4.7 billion. Elon Musk polls Twitter users asking whether he should step down. Okay, that's interesting. You can vote if you want. And then the FTX co-founder Sam is expected to consent to extradition from Bahamas. Well, that's all the major headlines. And the calendar for the week, I won't say for the day, because literally until Thursday the 22nd, we have some news events. Today we have nothing in terms of major news events, but this IFO business climate doesn't really make that much of difference in the currency moves. It doesn't affect the euro that much. And on Tuesday, we're going to have the Reserve Bank of Australia minutes. In Japan, back interest rates decision. We got used to the minus 0.1%. On Wednesday, GfK consumer confident for the euro. Canadian dollar, we will see some strong moves in the Canadian dollar. We have the inflation rate, 6.9 previously, expected to drop down to 6.6. And on Thursday, the inflation rate from Japan, previously 3.7%. Now we don't have any forecast yet. Maybe in the next few days we will have a forecast. So let's go to the charts. US dollar weekly, ladies and gentlemen. Good morning, guys. Good morning. Welcome. I see many people, they join us today. It's fantastic. Guys, are you holding any trades or any trades you want to share with me and with the audience maybe you took last week, or what was your biggest struggle, let's say, last week in trading? You can kindly let me know. Maybe it's something that other people they want to ask, but always a brave person helps the whole group. Let's start with the dollar index. We are on the weekly chart. We put this high as a reference. Let's say it's the most obvious market resistance broken about 6 months ago, and we just use it as a possible support. So last week the market, this is the weekly chart, last week the market put this rejection here. However, we have to understand that we broke outside of this strong upwards trend line support. This trend line touched 1, 2, 3, 4, 5, 6, 7, 8 times. It's so strong because of how many times had been touched so far. We broke below this trend line. The market is clearly The market showed us that sellers, they control this market because it's been a while and the market is just creating lower highs and lower lows. This candlestick here, it's a hammer for those who know about candlesticks or a long lower shadow. It has bullish implication. However, we do have to understand that most of the times the market, let's say if we look at the daily chart, the market make these lower highs and lower lows. And of course, in this retracement here, the market, it's going to put on a higher time frame a candlestick reversal pattern. But a candlestick reversal pattern does not indicate that the trend will reverse. We have three trends. We have the major trend, we have the intermediate trend, the one we usually trade, and then we have the minor trend. Now, a major trend like this, if we see on the weekly chart, let's say here, and we see a bullish and a bearish engulfing, or a gravestone, or any reversal pattern on the weekly chart that we recognize it as a strong reversal pattern, doesn't mean that it's going to reverse the whole primary trend, the whole strong trend in the market. All right. So we have to understand this. In order for us to start looking for buys, we have to use technical analysis, and we say, okay, what's the strong indication that buyers, they're going to maybe dominate this market? They're going to just do this higher high creation. If we just see lower highs and lower lows, then what's the reason to start buying aggressively the US dollar? It means to go short on the pound US dollar, euro US dollar, Aussie US dollar. And as I always said, in trading, guys, there is no such a thing as wrong and right. Okay, in trading, I repeat that, there is no such a thing as this is right and this is wrong. No. If you see here and you believe that the market is going to push to the upside and you want to buy, nobody will charge you. There is no right and wrong thing. There is only high probability and low probability situation in trading. A high probability trade does not guarantee a winning trade, and a low probability trade does not guarantee a losing trade. Please write this down and take some time to digest it. Okay, high probability trades also lose, low probability trades also win. So how do we approach? Let's say you see here that you believe that the US dollar is going to push to the upside and you want to take some positions with the US dollar, on the euro US dollar, on the pound US dollar, and so on. What can you do? Two things. First, you have to understand where the major market bias is. Major market bias is to the downside because of the lower highs and lower lows. If you want to take this trade here, you can first acknowledge the fact that based on technical analysis, it's a low probability trade. And the second, there is no such a thing as wrong trade, is not wrong. It's no such a thing as many people, they say you took the wrong direction. No, there is direction always, up and down. It's just how probable a winning trade can be on this correction. So you can reduce your trading size. If you are risking 1% or 2% like me on every trade, if you want to take this, that you understand it's a pretty much low probability, you can just simply reduce your trading size. You can go with 0.5% or with 1%. Okay, if you are trading 1%, you can go with 0.5%. If you are trading with 2%, you can go with 1%. Just do something that it's not gonna, for example, you're not gonna risk the same amount of money on a reversal rather than on a trending market here. For example, you see this bullish engulfing line here, this bullish engulfing candle. Of course, if you're risking 1% full size, you're going to risk 1% and you don't trade to the upside. The same with this one here. But if you're going to see this candle here and you want to trade it to the downside, or this one here, for example, this bearish engulfing, you understand that the primary trend is upwards. So if I want to take this, I understand that it's a low probability trade, but I can still squeeze something out of this trade, let's say. So if I decided to do it, just simply reduce your trading size. Okay. I hope it makes sense to everyone. And let's have a look at the DAX 40. Here on the DAX 40, I draw a FIB retracement because it's a bit mixed. Okay, primary trend, it's a bit ranging. Then intermediate trend is let's say a bit to the upside, sideways, how you call it. It's not that clear. So, and we have this resistance. The market put this rejection here with this candlestick. So what do we expect? Definitely, we do expect to see some pullback. And as I said, on these long candles here, like the engulfing candles, it's not exactly an engulfing candle, but let's use that terminology for now. Usually the markets, they retrace about 50% of the move before they confirm the direction of this bearishness. I said, usually we don't have a crystal ball to know what is going to happen all the time. So at this point, if we're going to go short, we can acknowledge the fact that because it's not that high probability trade, because the market is just moving sideways, we can understand that at FIB retracement 38.2%, most likely buyers, they're going to be sitting here, and we can see price struggle a bit and then move to the next level, the 50% FIB retracement. So it will be a good to have it as a target. Now, if we go to the daily chart, we can see the pattern here. We talked about this impulse move to the upside. Then we saw this consolidation phase here. That's what we call public participation. And then we have the distribution right at the top. In many times, the distribution comes in forms of rectangle, and a break below the rectangle indicates that the pattern is confirmed. What can we expect now? We can look for short, definitely. And if you want to see a possible area to place some sell limit orders, is this one here, right at the 50% FIB retracement from this high to this low. Or you can, if you are very aggressive and you just sell it from here, something I don't do personally, but if that's your way of trading, then nothing wrong with that. Otherwise, you wait for some candlestick, some greens to appear, and you wait for some rejection, and you can just start selling. Same with the FTSE, same with the Dow Jones, pretty much the same thing. With NASDAQ, we broke back to this rectangle here, to this area of consolidation. So we can see this move to continue to the downside. Also, the S&P, it's a bit mixed here. So if we go in the weekly chart, we can see a strong bearish candle. It's clear to see this pattern on the weekly chart, to be honest. And if sellers, they are so aggressive, they're going to push to the downside. Now, as I said, it becomes a bit tricky towards the last 4 trading days before Christmas. And For example, we can see the US dollar is just pushing to the downside. Now, this can cause the Dow Jones to push to the upside. This can cause the Nasdaq and the S&P to push to the upside. But up to this point, maybe when we're going to come and retest, if we're going to retest again the US dollar's support, then we can see a different picture. If we see a double bottom here, it means on the indices we will see a push to the upside, let's say up to here, some rejections, and maybe we can see continuation on the indices, and that means for the US dollar we can see a new high. Then we can start talking about bullishness in the dollar. All right, and you guys understand when, excuse me, you guys understand when the markets are, when the US dollar is not trading in an easy recognized direction, then it's a bit of situation with the indices and with the majors. That's why we have also the cross pairs. And when the US dollar is just moving sideways or the trends are not that strong, we see good moves on the crosses, like the New Zealand CAD, like the Euro Pound, Euro CAD, all these pairs. We call them cross pairs. Now, I have the weekly chart on the pound against the dollar. Last 2 weeks, what did we see? We saw a hanging man here right at resistance that indicates that after an uptrend, a hanging man, it's a reversal pattern. If it appears on resistance, it has strong implications. Then followed by a false break and a close below with this bearish candle here. That's again a strong indication for sales. Now, for some people, these are reasons to start selling. For me, I would like to have a look on the daily chart and see what the market really is doing on the daily chart. If we have some divergence, maybe, because really the market is just moving on a higher high, higher low sequence. A major trend line resistance had been broken decisively with strong momentum. So maybe this trend here, it's over now. So this move here, it's not going to be a continuation of this overall downtrend. Maybe we have a new trend developed. And on the daily chart, we see that we are sitting right on this 200 moving average support. It acts as a strong support. So we can still see some push to the upside. Things they're going to be a bit tricky if we're going to break and come around this level. If we're not going to come around this level, it means we're going to see a follow through of this weekly bearish candle, and the market is going to break below this trend line. All right. But for now, we don't have any confirmation that the sellers are in control. The only thing we can see is a warning that maybe buyers are not strong to push the price to the upside. That today's closing candle definitely will show us the battle. And I don't know, guys, do you still holding the trade of the euro against the US dollar? I think we were trading it from this level here, and it was around 3.5, 4 to 1 trade. This one, same implication. If the dollar is going to get weak and it's going to continue the downfall, then we're going to see this move to the upside. Here, the same pattern, lower highs and lower lows on the US dollar CHF, and the market is just pushing lower. The market is trying to find some support, at least at this point, with the Aussie against the US dollar. If I zoom in, you can clearly see here that the on Friday, the sellers didn't push the price lower. They got stopped here, like we've seen it a few weeks ago at this point. Then the buyers, they stepped in. We will see if the same scenario will be applied. So these trend lines are not valid because we have this support. If we see some double bottom on the 4-hour charts, maybe that will help. But for now, Kiwi, one of the strongest currency pairs. USD against the Japanese yen. We said that at this point here, sellers, they can come to take control. And this bullish candle here stopped on Friday by these sells. So I'm still in the trade. I'm still waiting for the price to push to the downside. Guys, any currency pair? The gold, of course, the gold. On the weekly chart, we had this rejection here. However, similarly with the other currency pairs and the US dollar, if the US dollar will still selling off, we can most likely see the gold pushing to the upside. We will see what's going to happen. Aussie against the Canadian dollar. Excuse me. We are waiting to see, you see this weekly bearish candle show some rejection, and we can see some more selling this week. We will see what's going to happen. What I didn't like is that on Friday we didn't have a follow through from this bearish one here, but that's okay. Euro against the Canadian dollar. We are still in this uptrend. So unfortunately, we didn't have any opportunity to participate in this market. Maybe on the intraday chart, you had some opportunities. Let's read some of the comments here. Good morning, Theo. Good morning, all. Good morning. It's been a while. Hope you are okay, people. Hello, Joshua. Would you help me with APD stock? I will try to short it on weekly basis. Thanks. I don't understand. To help you in terms of what? In terms of technical analysis or in terms of entry points, Rumen? I don't understand, sorry. Gold inverse correlation with the dollar, definitely. It's priced in US dollars. So, or Euro New Zealand, we have this, the Euro and the Kiwi, as you can guys see, it's just trading around these areas here, and it's just moving from the one side to the other side of these boundaries. We are in the middle now. We didn't close above this resistance. Maybe the market is going to push a little bit and it's going to sell off. Who knows? That's a very tricky one. We are in the middle of the range. The best way to trade the ranges, it's from the bottom. We buy at the bottom and we sell at the top. Entry, stop loss. Excuse me. So the but which one? Rumen, is it this one here? Can you please tell me how the name is on the MetaTrader? Thank you. So I can find it. Guys, any currency pair you would like to see more analysis? If you want, I will give you the last one here. which it's in my watch list, and we talked about that on last few sessions. Here we have the Australian dollar and the euro against the Australian dollar. We broke above this area. If the market it's going to hold here, somehow double bottoms on the 4-hour chart, or some rejection here. Now we are retesting this zone. If we're going to see some rejection around here, I'm looking to buy and target this area here, because it looks like it's a development of a new uptrend. That will be interesting, so keep an eye on that as well. Intraday, I believe today it's the US dollar, Japanese yen to the downside because of these confirmations we have and the weakness of the dollar, the strength of the Japanese yen. So this one, it's a good pair. To resume, what is your recommendation for the intraday trade? Are you talking for which pair? Are you talking for which pair? Please let me know. Any pair. Sorry, I will use another platform okay, thank you so much. For the ADP, guys, sorry, I can't find it on the MT4. I'm going to just use another trading platform here. Anyway, we are in the process to integrate with the trading view. I'm sure many of you are aware. So you are looking about this area here, I assume, and you want to short Rumen, is that right? Yeah, so possible. Look, definitely you don't short right in the middle, right? You want to short somewhere here. So maybe you can use some fib retracement from here to there. Here it's a 61.8. Here it's a 50%. Maybe some entries here if the market is going to make that pull. Or you could short here on this candle on, I think it was on Thursday, on Wednesday. You could short it from here because that was a strong rejection. We had this strong gap. It opened there and it closed there. Okay. Yeah, ADP, not APT, ADP or APD. Okay. APD stock, air products and chemicals. Okay, sorry, that was a different one. Yep, so you have this area of resistance here. You have this rejection, daily chart. Look, if you believe this is what we call island reversal in technical analysis, and that's the exhaustion gap. So I believe that the stop loss should be go above here. So something like this, a stop loss above there, then an entry point if you have some chance to get it somewhere there, and you can have a good reward to ratio. You can use fib retracement to see where it's the 50%, 61, and you can take it from there. Okay. So, all right, ladies and gentlemen. So we talked about as well some trading opportunities for today. I hope you understand that the markets, sometimes they need some more intense analysis, And sometimes we just spend some time, we spend time to analyze, but we don't find trading opportunities. And then we just flip to a chart like the USD JPY, and opportunities are there, okay? At the least based on the market situation. Okay, so that's all from me today. I hope you have a great day ahead. Happy trading, ladies and gentlemen, and I look forward to see you again tomorrow at the same time. Thank you so much. Bye-bye.